Okay, on that note, let's also welcome on board Shaun Rein, China Market Research Group, founder and director. He's also the author of the book, The Split, Finding the Opportunities in China's Economy in the New World Order. And Shaun, in fact, that's exactly what I want to ask you about. Hi, morning. Thanks for joining us. Given the deal that we're seeing and how that is progressing between the US and China, the word right now from the US, at least from Donald Trump, is that the deal is done. What are you making of these prima facie details that are emerging from the deal? Of course, we don't have the fine print of the deal yet, but nothing ever is at face value when it comes to US and China. So what's your take on the agreement that the two nations have reached, and how sustainable do you think this is going to be in terms of the tariffs that they have decided to impose on each other?
That's a great and big question. I think Trump is saying the deal has been signed, and he's been talking about that the Chinese are going to send rare earths and magnets in advance to whatever the United States needs. Because what you've seen in the last month is the lack of rare earths that were exported to the United States has really crippled the American economy. You even have companies, big automakers like Ford and GM, are rumored to say we need to relocate our manufacturing to China so we can get access to rare earths, despite the heavy tariffs that they would then incur by going into the United States. But here's the thing. China's media has been a lot more circumspect with the details of this so-called trade agreement. I think China has said, the rumor is that they will give maybe export licenses to rare earths on a 6-month trial basis to American companies. So I think basically Trump is exaggerating the win in his mind, and China is being a lot more honest, probably saying, well, we don't have all the details ironed out. We want to come to an agreement, but quite frankly, China has the upper hand in the trade war with the United States right now. Everything that the United States makes, except for ethane and semiconductors, the Chinese can buy elsewhere. So instead of buying American beef, they're buying Australian beef. Instead of buying American oil, they're buying Canadian oil. Instead of buying American soybeans, they're buying Brazilian soybeans. So what you've seen is that there's a total shift in trade patterns and a total shift, I think, in power. And China is at the top of the triangle, the top of the pyramid right now in terms of buying goods and trading goods from other countries. We are seeing a shift in world order right now.
But are there signs of that, Shaun, on what the bond and the equity markets are telling you right now? Because you've got the S&P at an all-time high of 6,000. Doesn't seem like there's any concern around the tariffs and the repercussions or the changing world order, as you said.
Well, I mean, that's not true, right? I mean, Chinese equity markets are up 15, 16% since the start of the year, while the S&P 500 is only up about 2%. So it's quite clear that the Chinese Hong Kong equity markets are outperforming the United States right now. Now, the equity markets also don't necessarily reflect the economy, right? So what you're seeing right now is Abigail Johnson, who's the head of Fidelity. The rumor is today that her private investment house is going to be selling 40 Chinese tech companies that they've long held because they're worried about the regulatory. And I've been talking with a lot of mutual funds. I've been talking with a lot of LPs like pension funds and endowments, and they're getting huge pressure from not just Trump, but previously under the Biden regime to de-risk by not investing in Chinese equities. So that doesn't mean the economy's bad. That just means more oppression and bullying from the United States because they're trying to really contain China's economic growth. That might have happened 8 years ago, and that might have worked 8 years ago. But the big problem is the United States has gone after Europe. The United States has gone after Canada. You even hear Howie Lutnick, the Secretary of Commerce, criticized India last week and said, why is India buying Russian weapons? They should be buying American weapons. So the reality is the United States under Trump and Biden has been bullying people all around the world. And I think at some point the global South, or I prefer to call it the global majority, is saying, you know what? Let's not deal with all the drama. Let's not deal with weaponization of the US dollar, weaponization of technology, and let's move closer towards China, where we have a lot more stable relations economically.
Absolutely, and one can see that impact on both the HSI as well as the Shanghai index. But that's the case with even a DAX or Australia, or for that matter, even the S&P 500 index. But Shaun, do you now see a lot of money moving towards China-dedicated funds?
Well, I mean, with Australia, for instance, the Australian dollar has strengthened the last couple of weeks because basically Australia is a proxy for China, right? Australia's economy does well when China's economy does well, whether it be buying iron ore, whether it be buying, tourists going to Australia to buy products. So that's why the Aussie has strengthened and the US dollar has weakened. Now, when it comes to liquidity and volume going back towards China, we're still at a very initial stages. Most of the global funds only have about 25% of their holdings exposed to China. I recommend retail investors to have 15 to 20% because of the volatility and the regulatory fear and the sort of Damocles from the United States that they might ban mutual funds from investing into China and Hong Kong. So we're seeing in my conversations with institutional investors like hedge funds that they want to come back into China, but they haven't come back yet. Now, that gives a great opportunity for speculators and people who have a high risk appetite to trade in front of the institutional investors. So personally, I'm getting more exposure to Hong Kong equities the last 6 months because I'm trying to front run what the hedge funds are doing because they still haven't quite gotten into the markets yet. And I think they will in the next 3 to 6 months because they have to make the business case. China's outperforming the S&P 500.
Shaun, that's about the markets, though the financial market seems to be welcoming this particular news. But many experts caution that this is just a framework and the details remain a bit light. Give us some sense that apart from this rare earth issue that is impacting many industries, including and majorly the automotive sector, which other sectors do you believe there has to be a deal between US and China, and where stands a chance where US has to go ahead and make deals in some of the other sectors?
Well, the United States needs a deal, right? Frankly, China controls about 35% of global manufacturing. So America might have the money, they might have the capital, but they need to buy the products from China. At the end of the day, China makes not just rare earths, about 90% of refined rare earths, but they also make most of the ibuprofen, most of the Tylenol, most of the antibiotics in the world comes from China. So at the end of the day, that's real leverage. And so China has been risking from the United States over the last 8 years. So for instance, in 2017, 18% of Chinese exports went to the US. That number is down to 14%. China, on the other hand, has shifted and exports to ASEAN has gone up to 16%. So basically, it's a game of chicken right now. China's economy is hurting. Don't get me wrong. There are about 15 million people who are involved in the export sector. You've seen that the CPI index has dropped about 0.1%. So we're dealing with the D word or deflation. So the economy in China is not booming, but China's not going to blink. They have the resolve to push hard back against Trump and Scotty Besson and Howie Lutnick, because at the end of the day, the Americans need to buy from China. They can't buy antibiotics from any other country in the world, except for a little bit from India.
Great to have that perspective from you. Thanks so much for joining us this morning. On that note, we'll let you go. But while we're talking about major geopolitical developments, we also have to take a look